welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, February 23rd, 2023, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we are seeing futures up this morning. Dow futures up about 79 points. S&P 500 futures up about 18.5. NASDAQ futures up roughly 110 points. On a percentage basis, clearly much stronger potential start today for the NASDAQ, up almost 1%. S&P, on the other hand, up a little less than 0.5%, and the Dow up about 0.25%. The reason for that disparity is NVIDIA. NVIDIA, one of the larger semiconductor companies, came out, beat earnings expectations last night after the bell, and so semiconductors are higher, and of course, they are much more represented on the NASDAQ than they are on the S&P or the Dow, and as a result, we're seeing a little bit better action there. Crude oil prices up about 1%, back above 74, near $75 a barrel, and we've got the U.S. 10-year Treasury yield at 3.945%, up 2 basis points. This would mark the third straight day of closing above 3.9%, which was the key resistance level before. So it's going to be very interesting to see how the market today deals with some pretty good earnings news from a couple of key companies, and at the same time, higher interest rates. In the past, if you look back to August, September, that breakout of the Treasury yield and the renewed advance to the upside is what sent the stock market down, or at least that was one of the culprits. And so we've got the same scenario perhaps building here. So that'll be interesting to watch throughout the day. Let's go through today's agenda with you. Going to start off with that daily market recap. Then we'll get into talking technically, small caps and RRG. I started talking about this yesterday in my show, my Trading Places Live show over at Earnings Beats. And I said I will try and dig a little deeper today and show you a little bit more on how you can use the RRG and kind of dig in. So I'm going to do that later in the show. Then we'll go through the earnings spotlight, and we will wrap up with the 3 you must see. I do want to take those of you who are new in particular over to earningsbeats.com. This is our website. Go to earningsbeats.com, scroll down if you want to learn more about us at Earnings Beats, or you'd like to follow. We do have a free Earnings Beats Digest newsletter. Comes out 3 times a week, Mondays, Wednesdays, Fridays. 8:30 a.m. is what we shoot for, so we try to get it out about an hour before the market opens. All right, what happened yesterday? Well, let's jump into the daily market recap. Dow Jones Industrial Average yesterday down 84 points, S&P 500 down 6, NASDAQ up 14, a little bit of a bifurcation there with rates sitting over 3.90, a little surprising. Mid caps up fractionally, up 3 points, and small caps up 4 points. On a percentage basis, though, small caps your leader yesterday. To the downside, however, it was the Dow Jones. Kind of weird. Small caps going up, Dow Jones down on a day when rates are going higher. Kind of seems a little strange, but really not much. I mean, we're talking about pretty small differences in terms of percentages. Looking at the sectors, materials, discretionary, communication services, all bounced back. If you recall, the day prior, back on Tuesday, we had all 11 sectors down. And so these were 3 that did at least try to lead the market back to the upside yesterday. 2, though, that still continue to struggle. Real estate, look at the move right there down below the 50-day moving average. It looks like maybe the trend line's been broken. Also, energy, which I talked about earlier this week, breaking down out of this trend line. And this trend line was kind of important because off of the uptrend, I saw equal highs. I saw rising lows. That was an ascending triangle that was bullish. That has been negated with this move down this week. Energy now looking like we're going to test this 82 support level. Really need to see energy hold on to 82. All right, 10-year Treasury yield. Let's take a look at that. And this is what I was talking about. There's the trend line right there. If you connect these highs, breaking out in February, the last time we did that was when we had these lows coming across here in June and July. Remember, the S&P 500 had a really good run from mid-June through mid-August. Well, right around mid-August is when we broke this downtrend line and started moving higher through the moving averages, ultimately to new highs for the 10-year Treasury yield as we took out that prior June high, which was at about 3.50%. went all the way up to 4.3. Are we going to do the same? I don't know. We're going to find out. We do have this downtrend line, though, that was in play, and we have broken it to the upside. We've also cleared this intermediate high here of 390, similar to what we did here with this double top at about 310. So you've got to at least respect that in the short term, we have an uptrend in the yield. Are we going back to 4.33%? Are we going to go through it? Again, I can't tell you. We're going to find out. Bond market will speak. We'll be listening. But what I can tell you is that on this break of this trend line, the S&P 500 here in February has started to turn back down. So let's look at the S&P 500. And you will see right here, early February, turning back down. So this is what I was talking about over here, moving up, breaking out of that trend. Look at what happened back in August when we broke that downtrend line. The S&P 500 back in August, we topped and had another move to the downside. So I try to remain objective, give you both sides. For those of you that are bearish, this is what I would be leaning on. I'd be saying, hey, rates going up. This is bad for stocks. Stock market's going to go down. I'm not so sure, because I think we're in a completely different market now than we were in August, and certainly than we were back at the beginning, first 5 months of 2022. But hey, as long as we remain below that 20-day moving average, I think you have to be cautious. Get back up above that 20-day. And because I am bullish to begin with, I think market's going higher later this year. I don't want to ignore a move back up through the 20. Now, what could be frustrating for traders is I would not be surprised to see us go through a period of consolidation. And periods of consolidation tend to lead to a lot of frustration because these moving averages don't work. They don't work as resistance. They don't work as support when you go sideways. I think February, mid-February to the end of March historically is a troubling period for U.S. stocks. That dates back to 1950. They don't do as well. You can blame it on whatever. I think it's because the end of earnings season. We see the same thing in the second quarter and the third quarter. The fourth quarter is the only outlier. That's where we see strength in both halves of the quarter. But the first, second, and third quarter, the first half of the quarter, so in this case, January 1st to February 15th, is the better half of the quarter. April 1st to May 15th, much better than the second half of that quarter. Then you have July 1st to August 15th, much better than the second half. That's what I was just pointing out. Look at this, July 1st to August 15th. There's your move up. August 15th to September 30. There's your move down. Now that was, doesn't quite work like that every year, but that's the tendency. So you need to be aware of the market's tendencies. Just like if you're coaching sports, if you're coaching an NFL team, don't you want to know what the other team might tend to do on 3rd and 5? Helps you prepare. So at least be aware of the market's tendencies. That's my point. So from now through the end of March, I said it yesterday, I'll say it again, I've been saying it, the market is vulnerable in the short term. I want to be really clear. I believe the market's going higher. Long term, I think at the end of this year, we will be a lot higher than we are right now. Short term, that doesn't, when I say the market's going to be a lot higher, doesn't mean I'm saying market's going up every day. Every week's going to be a piece of cake, and we're just going to keep going higher and higher. We are going to have periods of strength. We're going to have periods of weakness. I believe the overall trend, longer term, is higher. We'll see. Also, I did fail to mention later this morning, we're going to get the Q4 GDP second reading. First reading, initial reading last month came in at 2.9%. We are expecting, at least based on consensus estimates, for that to remain unchanged, 2.9%. Also, initial jobless claims come out later this morning. Last week, 194,000. This week, we are expecting 200,000. We'll see whether or not, where we go there. Unemployment, though, is at record lows. Initial jobless claims have been extraordinarily weak, surprising most folks, including me. But it's staying low. And as long as it stays low, those who are looking for recession may have to wait a while. We'll see. All right, NASDAQ. Let's take a look at the NASDAQ 100 quickly. And here is that move that we saw on the NASDAQ, breaking out above this high. If you use that inspector, you can come over here and check this out. But the open that day was 12,141. Yesterday closed at 12,066. So we are about 80 points below that breakout level. So we have lost support, at least in the short term, although with futures, it looks like maybe we'll be right back up above. But I would look for the same thing here as I do on the S&P 500. Below the 20-day, be cautious, get back up above the 20-day. I wouldn't be that cautious. I do not. My philosophy personally, I believe we're going higher. I will not miss the move to the upside, even if it means it costs me on any pullbacks to the downside. I am not going to be sitting in cash and watching the market go higher because I believe the market's going to go higher. So I'm going to err. Everybody's got to do what they think is right and appropriate. But if I'm going to make an error, it's going to be being long with the market going down. All right, let's move into, I wanted to show you and take a dive into these small caps using the RRG. And first of all, I think the RRG is brilliant. Julius de Kempenaar, a good friend of mine, he's the founder of the RRG charts. I think this is a tremendously useful visual way to see what's going on in the market. So what I did on this RRG is I've taken the small cap index as the benchmark. So the S&P 600 small cap index, that's my benchmark. And then I've taken a number of small cap sector ETFs, and I've plotted them on this chart. Now, again, you're rotating around your benchmark. So think of the SML, the small cap index, as this point right here in the middle. And so all of these ETFs are basically rotating around, and you tend to go in this direction, normally in northeasterly, and then you come down in southwesterly fashion. Normally, that's the way it works. It's the way it's supposed to work. And that's because you're always reverting to the mean. You don't trend higher than a benchmark forever and ever. At some point, you start to show weakness. And so you're always rotating around the center or the benchmark. So when you look at this, first of all, PSCH, that's healthcare, small cap healthcare ETF. PSCU, that's utilities. PSCD, way over here, you've got discretionary, then you've got technology. PSCT. Anyway, what I like to look for, some look for the improving. I think that can be a little bit of a head fake, personally, as you know, my experience working with RRG. I think it's a good sign. I think I'd start to watch it, look at the charts. But a lot of times when you're lagging and you start to move into improving, think about when you were in the downtrend last year in 2022. Remember how in March we had this big rally for a couple of weeks and then we turned right back around and went back down again? Well, if you were looking at technology back then, that March move to the upside, I'm going to come over here just for a second to show you what I'm talking about. Here was that March run at the end of March. If I go back just a little bit further, you can kind of get it in context. So the bear market starts beginning of the year, big move down. And then we had this March rally. It didn't last, and we started to roll back over. Well, picture that period of time, we saw a lot of the aggressive areas had a very strong 2-week period, but they had been lagging. And so they were over here and lagging. They were improving in March, and then April, the bottom fell out, and they would have come rolling right back down again. That's my fear when I see a group that's improving, because you might be getting it right as it's ready to roll back over again. So just be cautious. This quadrant up here, there is no mistake in what is going on. If you're up here in the leading quadrant, you are leading. You're not just leading what depends on the timeline. Like this is a long-term weekly chart. The further you are to the right here, this is the relative strength. Left to right is your relative strength. Top to bottom is your momentum, relative momentum. So your momentum, when you start to pick momentum up, you'll start moving up. When you start to see significant relative strength, you move to the right. And so this is just your normal, typical rotation. So I think when you look at this, to me, clearly, small cap discretionary is where it's at right now. I mean, we could, talk about these two because they're improving. I could also maybe talk a little bit about technology because it is in this leading group. One other thing you can do with RRG, notice these lines and the dots behind. It's basically leaving you a trail of where it's been. And if you count the dots back, 1, 2, 3, 4, 5, look over here at tail length, 5 weeks. It's a weekly chart. So it's telling you what's been happening the last 5 weeks. Now, when you listen to Julius talk about this, and again, he is the one you want to listen to primarily because he created this, but he talks about the power of the moves based on the length of the tail and how fast groups are moving. So you can see energy, small cap energy has lost a lot of steam very quickly. Discretionary is where a lot of that money is rotating to. And then you've got technology, which is not really moved much. It's staying in the leading quadrant, but it hasn't really moved much. The tails are really short. Now you can take this and move it out. It's going to make your RRG really messy. But look what's happening as I drag this tail and make it longer. It's telling you where these things have been. So look at energy. So and I'm going to make them all fit. But look at energy's move. Energy went from lagging and absolutely was soaring. And then look at how fast. I mean, energy's been the volatile one. I mean, if you just look at this, there's no question. I don't have to look at the charts. I know small cap energy has been the most volatile group. I mean, we're almost back where we started. And we've made huge runs, both in terms of momentum. Look top to bottom. This group has the biggest swing top to bottom. How about left to right? Relative strength. Also pretty much the largest swing. Small cap energy has been all over the place. So if you're a trader or an investor and you don't have a high tolerance of risk, this is probably not the group you want to be looking at. You probably want to be looking at some that have a little bit tighter moves or, aren't showing all that, all that volatility. Now, when you're looking at something like this, you might say, well, I can't even tell which line goes with which, right? Well, first of all, which quadrant are you in? If you're in the improving, which is blue, is that where you are right now? If it is, you have a blue line. If you are currently in the lagging, which is the red quadrant, then your whole line is red. If you're currently in the weakening, then your whole line is yellow and green for here. So you can see the couple that are, but if you really want to get a little bit more highlight, what you can do is go down and click on, say, the consumer discretionary, and it'll kind of put all the others in the background so that you can see exactly what's been happening. So it looked like discretionary was going to roll over, and then all of a sudden it just took off. And we can keep dragging this back, but you can kind of see we were not in very good shape. We were improving. It looked like we were going to roll over, and then we took off. All right, so I'm going to shorten this. And notice as I'm shortening this area that's highlighted or shaded is also shortening as I pull this across. Now I can just go to the last 2 weeks, and then what I can do is grab this shaded area and show you how discretionary. This is the chart over here of the small cap. That's what I'm dragging on. And as the small cap was going down April and May, look at the aggressive discretionary group way over to the left. Very poor relative strength. Starting to show a little bit better momentum, though. That's when I called the bottom in the market back in June. You can see the momentum is starting to improve in discretionary, even though we were moving down to new lows. And then since then, you can see we start to improve there. We had one more big move down. This was the August to end of September. Look at the discretionary go down one more time. And then once we got into about mid-October, look at discretionary takeoff, small cap discretionary. So that's where we are now. So in this move to the upside, this has been your leader. So I'm going to take this RRG one step further now. First of all, here's the chart on the PSCD versus this is just the absolute chart. Clearly, we're trending higher. This is relative to the S&P 500. So it was languishing all the way until December, and then it exploded to the upside. Now, I went to Fidelity, and I looked up the PSCD to get the current top 10 holdings. And I put the top 10 holdings in here as a symbol with the PSCD now as the benchmark. So the PSCD, we already know that's really strong. But on this chart, it's the center. So any of these stocks that are over here on the leading gives us leading stocks in a leading area of the market. So if you're looking for good, solid small cap stocks, this is an area that I would start. And the one that kind of caught my eye was ABG. MTH, the home builder, it's starting to turn back to the downside. Still way over in the leading, very strong relative strength, but it's starting to move down. AEO is coming down. Maybe it's going to turn back up, so it's kind of worth watching. But I just like what's going on with ABG, continuing to move like in this northeast fashion, mostly east, but a little bit north. North gives you momentum. East gives you relative strength. But there's your move through. And when I pulled up the ABG chart, now the only thing I don't like, and you find this a lot of times with small caps, is the volume can be a little light. But keep in mind, this is a $230 stock. So if it's trading 200,000 shares, that's a lot different than being a $5 stock trading 200,000 shares. There's still a lot of money in this one. So I'm okay with Asbury Automotive Group. But look at this move right here. It was riding the wave of the PSCD. This was, well, riding the wave or maybe driving the wave. Look at the volume coming in and that move, and look at all the hollow candles. What do hollow candles do? Well, when you close toward the high of the day, your AD line goes up. Look at the AD line on this stock. Very strong accumulation, even when it was going sideways. Look at the accumulation. And then we see what happens. And this same thing, same principle, I think, is going to take place in the overall stock market. We were going down in 2022, and yet every time we'd rally, we'd set a new high on the AD line. Here's the, look at the S&P going down. Here's the AD line going up. Right down here at the bottom, we go flat for a little while. Now we're breaking out again to new highs. And then you look at something like ABG, this is just an individual stock. But while it was doing nothing price-wise, the AD line was strengthening. I would argue that Wall Street was accumulating. And now we see what happens at the end. So ABG looks really good on the chart. Anyhow, I thought this was a really cool way to look at the market. You can do this with the small caps. You can do it with the large caps. The RRG is really, really a cool way to see the rotation. And then remember, you can pull this back as much as you want. You also, this is weekly. We could do daily. It's going to show you a lot more movement. This is 6 trading days. But let me grab this and kind of watch the rotation here. I mean, it's crazy, right? So if you're a short-term trader, that might entice you. If you're a longer term, that would just make you dizzy. You're like, wait a minute, I'm in the leading group. Now I'm not. Now I am. Now I'm not. Well, that's because daily rotation is going to shift much more quickly than weekly, right? Anyway, play around with the RRG. It's a really cool feature at StockCharts. If you go to the dashboard, your dashboard, and just go over here under Member Tools and just scroll down, you'll find it right here. So right beneath the market carpets, right above the dynamic yield curve is the RRG. Click on that, and then you can set it up. One other thing I'll mention about this RRG is you've got different groups you can select. It's already pre-done for you. So if you wanted, we just looked at small cap discretionary, but what if I wanted large cap? The XLY is the large cap. So you click on that, and here's Amazon, Tesla, Home Depot. This is all of the stocks, the weekly, and then you can kind of pick one out. It tells you which ones, have been doing really well, ones that are in the green. So you can just highlight win. You can see win. Pulling back, what does that look like on a chart? Well, this is what that pullback looks like. Is it a bad chart? No. I mean, you might look at this and say, well, it's deteriorating, or it's really falling apart. No, it's not falling apart. It's just pausing. And so it's starting to lose that momentum. If you look at the relative strength, we're still, whoops, wrong one. Relative strength, we're still way out here to the right. We haven't really lost much relative strength. So we're coming down, but we're only coming down in momentum because the momentum is slowing. We're not going up anymore. So we were going up really nicely. Now momentum is slowing. But because the market's been coming down, Win still is doing well on a relative strength basis. Look at Win down here relative to the S&P 500. Still doing very well. So there's a lot you can do with this. Anyway, play around with it. I think it's a great tool. And it's really unbelievable what Julius did with this. All right, let's talk a little bit about earnings because we only got a couple more minutes here. Just wanted to go through. NVIDIA was the big one reporting last night. They did beat 88 cents versus 81 cents. And if we take a look at the pre-market action, if you want to know why futures are up, unless we're falling apart, which I don't think we are. No, you got NVIDIA now up $22 back to 230, right back to the high. So this little weakness right here is all erased at the opening bell. Now, do we open above that high candle body or below? If we open above it, I think that's a bullish sign. If we open below it, I think we just could consolidate for a little while. But NVIDIA, anyway, I wanted to show you that one. Let's go through a couple more here. eBay down 5% after slightly beating expectations, 107 versus 106. Mosaic, moving over to the materials area, they had a big miss. $1.74 versus 208. Stock only down 1.4% though, hanging in there. How about Lucid in that auto space? Lucid Group down 13%. Another big hit here. They did miss. They came in with a loss of 40 cents versus 39 cents expected. Etsy up 4.5%, almost 4.5%, up $5. They missed though. This is a little surprising, the reaction here. 77 cents versus 85. I don't know. Maybe they raised guidance. I didn't look at their guidance yet. But just on the surface, they missed on their earnings, and the stock's still up over 4%. Network Appliance, yesterday, they beat $1.37 versus $1.31. They're down 5% almost. And a couple this morning that came out, Alibaba, they beat easily 279 versus 229, stock up 6.5%. And it's also bouncing off of a key area of support, both the 200-day and this area of price support. And then the last one I wanted to show you, Moderna. Big miss on Moderna, 361 versus 466. This is another one down around its 200-day moving average. Looks to me like we're going to gap below it. Moderna not looking very good right now. All right, let's wrap this thing up with the 3 you must see. So I'm going to start off with Salesforce.com. And, all right, so let's see. We've got about another minute or so. So let me see if I can get through this pretty quickly. Salesforce.com, there's your pullback, but it's actually been strengthening coming off of the December low. I like it right around here. I'd really like to see it get back up through the 20-day, but that AD line has strengthened a lot in the last 60 to 90 days. I think we're going to turn back around to the upside. AXP, American Express, look at that AD line, really strong. I love that gap up with earnings. I think they've turned the corner. 20-day may hold. If it doesn't, gap support at 167 is your key level. And the last one I want to show you is Boeing. Boeing, big move up. Really, I said at the beginning of the year, this could be one of the better stocks for the year. We'll see. It has pulled back, though, in recent sessions, last 5 days, pulling back and testing some key support from recent days. So I think this one looks good. AD line keeps strengthening, which is a good sign. Anyway, that's it for me. I appreciate everybody tuning in. This is my last Trading Places show of this week. I'll be back next week on Monday for your next Trading Places Live. Go over to Earnings Beats, and around 8:45, 9 o'clock, just come over and click on that Trading Places Live at the top, and you'll be able to join me. Anyway, that's it. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.